Well, hello members, and welcome to the weekly show. It's July 17th. It's the weekly broadcast where we take a look at what happened and what it tells us about what probably is going to follow next. Last week got that follow through. It was significant. We're up 6% now on the indexes for the better part of the year. The one that's trailing still is the NASDAQ. NASDAQ just barely turns positive this week, and that's on the year. And so you've got 6% across the board with the NASDAQ just barely positive. And those NASDAQ earnings are going to be the key in the next couple weeks as Apple, Google, Microsoft, all of those companies come out with their earnings. And so far, those earnings have been a disappointment in that tech sector. So it's going to be a big deal. That's going to be what drives this market higher, if it's going to go higher. And we'll have to see how that plays out, and how we come into those earnings will probably have a lot to do with it. Last week, if we look at the technical summary here, I want to just kind of guide you through what took place. You got a lot of positives taking place out here. In particular, the Russell is the leader on the way up. If we look at the Russell in terms of the ABCD structure, it just finished off the ABCD structure on the daily chart. So we've got an A point here, the B there, the pullback right makes your C, and then you get an extension up, that's the D. And so the ABCD structure on this time frame, daily time frame, has already been met. If we look at it on other time frames, so on the weekly time frame, the picture looks a little bit different, and that is that we still have farther to go, and that's going to be true on all these indexes as they project up. But I'm going to show you on the Russell, since that's the only one that's finished the ABCD structure on the daily. Here's the A to the B point on the Russell. You get the pullback, and you got a deep pullback again. It's just slightly less than that. That was the hesitation, the consolidation, and now that ABCD structure points quite a bit higher on the Russell, if in fact we're going to get that move. I've put the projections here for each of these for you on the weekly. The Russell is 1298. I went back and looked at it. It's a little bit more than what I thought it was before. And then you see the other projections on these others. Now, on the S&P, the NASDAQ, and the NDX, with the NDX, NASDAQ being the most important ones, those projections on the daily charts haven't came through yet. But what's happening now is with this continued push, the probability of those actually getting fulfilled is increasing rapidly. And so they're not that far ahead, another 1.5–2% in most cases. And if we get that push up to those areas, which I expect is going to happen now, whether it come after some sort of nested ABCD structure inside this or just straight away, either way, I suspect we're going to get up there before it's over now. And so that's going to be one of the opportunities for anyone trying to buy this market, is to look at that. If we look at where you would buy the market, and I don't have this in the notes, but it's fairly obvious, is you look back at the projections on an ABCD, bullish ABCD retest regenerate. And I would look on the weaker markets like the NDX as a place to look at that. So if this market starts to come back in, look for the NDX to try and do a full retest and regenerate back to the upside and fulfill that ABCD's target. And so I would look at these to tell you when to buy the other ones. So in other words, if I wanted to buy the S&P, which has been one of the stronger ones, or the Russell, I would look at the NDX to tell me that's the one I want to buy, or at least give me the signal of when to buy the one that I want to buy. So those are the projections. That's what's happening. You got that follow through. I think the odds are much higher now. Until you get that follow through on the first breakout, you need to see your odds increase. That's what they did this past week, and that makes this move worth buying on the first dip, which is, I think, what you'll see happen when that dip comes. And when you see an opportunity, and most of you probably didn't see it, but Friday afternoon we had that coup attempt in Turkey. I logged back in and bought some of that S&P on that push down, and I logged it into the trading room, my room, to let you know that I thought that was buyable. And so when you see an event after hours, if I believe it's significant and it offers an opportunity, I'll offer my comments and tell you what I think is going on and what you probably might want to do. So we'll see if that plays out. But again, the point is, with this big follow through, whatever the retrace is, whenever the retrace comes, that first push back down is your best opportunity to buy it. And so you just have to close your eyes and buy. And you're going to get that projection fulfilled probably on those bullish ABCD structures to the top side. Why buy stocks with all this uncertainty? You know, this is a question I've been asking myself, and I've been looking at and trying to come to a conclusion as to why this is the case on a fundamental basis. You know, the most obvious reason is that the central bankers, the governments, they're going to ease further. They've got this Brexit vote. They've got the uncertainty surrounding that. And they've all come out and talked about more easing. You see it in Japan. You see it in the Bank of England. You see it in the ECB. You even see the Fed saying they're not going to raise rates. So you have continuation of what we've seen for almost a decade now, which is central banks coming in, pushing more money into the system. As that money floats into the system, it has to, some of it will go to the equities, and we've seen that time and time again. So don't be surprised if the equities go up, which is what we're seeing. And almost all the markets are ready. They're predicting that's what's going to happen. Look at Australia. Look at India. Look at Brazil even, where it's a mess. What are they doing? They're all going higher. And that's because of the central banks. Another less obvious reason is if you look at the dividend yield on the S&P 500, that dividend yield is 2.5%. That's more than you can get on bonds right now. So it actually makes sense to get your returns on dividends out of stocks, which are taxed at a lower tax rate, than to put it into bonds. And so you're seeing that as another thing. Another item that may potentially push this higher is earnings. Expectations are extremely low. 5 quarters in a row of lower earnings. If those earnings come out anywhere better than what's expected, then we're going to see this market potentially move higher on that. So I believe that, you know, if you're asking yourself why should you buy, I think there's 3 good reasons there as to why you might want to buy from a fundamental standpoint. Last week, economics did nothing to stop the momentum. The Fed speakers, you know, they were out every week. We didn't every day of the week. We didn't see anything from the Fed speakers, from any of them that I could read. I read most of them, and I didn't see anything suggesting rate hikes. Everybody backed off, and all of a sudden, everybody's all happy about not doing anything. And so, Fed speakers didn't do anything to stop the momentum move. Earnings didn't do anything to stop it. You did see Wells Fargo on Friday with bad earnings. They traded lower. The financials are still struggling, but outside of that, most of those earnings were bought. Although I would say that one thing that you have difficulty in a week like last week, with every day being a gap up, it's hard to get a good read on what earnings are doing, because if they come out and they say, okay, earnings are okay, and the stock goes up, is it going up because the market's going up, or is it going up because that stock really looks good? And I think it's hard to distinguish last week which one it was. We'll see that better when we see a pullback and we see strong stocks move higher on earnings. And I suspect you'll probably see that over the next week or two. Can any pullback happen? Well, sure it can. And at this point, it's probably going to happen on some exogenous event, just like we saw Friday with the Turkish coup. All of a sudden, there's a news break, prices plunge. That's what gets you the retrace. Maybe there will be some continuation of the uncertainty in Turkey on Monday, for example, and that may provide the opportunity for a retrace. But when that retrace comes, that pullback occurs, you're going to want to buy it. It's pure and simple, because these probabilities now, so they're associated with a strong move. Let me go back to the S&P and show it. They're associated with a strong move up now on the S&P. Your breakout point was 2103. Your second breakout point was 2135. That continuation move now, to get a retest of this high on a daily, you're going to come back after more than 6 bars most likely. We know that after 6 bars on a retrace, our probabilities go up extremely high. And so that first pullback is going to be a good opportunity to buy this market, plunge a bunch of money in there, and get that continuation. And ideally, you get that before you get the push to the projections on the ABCD targets. And so if we do that, then we'll be able to buy that knowing that we're probably going to push to those ABCD targets, and they're not, they're not going to be small once you get the retrace. If I push back up here, 2191 on the S&P, we could pull back to 2130. That's 60 points up. That's 3% you could get on just a retrace buying the S&P outright. Let me see what else we got here. Sectors. One thing that we started to see, and I'll pop over and show you, is that we started to see some of the sectors exhibit some more signs of this move being extended and being able to retrace at any point. So an example on the sectors here, XLE, you can see how it's struggling, right? You have an ABCD target from this low, and let me draw it in for you, from the low right here to that high, right? Back down, and then back up again. So there's a little bit more to go on this move, but the target, for the most part, it's already extended in this sector. Crude oil itself is having a tough time, so you're getting a consolidation up here in this area, and so they're extended. They're already extended, and some more so than others. For example, financials, which got hit on Friday. Financials pulled back, not bad, but they've already had their ABCD runs, right? If you look at technology, right, you've had a decent run. You're almost done, if not done, with the ABCD targets. And so as you look through these sectors, the sectors are getting extended. Sectors drive markets. If the sectors are extended, then the markets can't keep extending. You're going to get a retrace. And so my point is if you're trying to buy the market here, you're asking for trouble. You're asking for a price that's going to be cheaper probably somewhere in the next few days. And so the idea is keep that money ready, keep watching the market as it retraces. Then you plunge in and make your buys, and you get that projection fulfillment after that. It's hard now, really, it's hard to find a sector that's attractive. As I just said, they're pretty much extended. And so, the worst thing you can do is chase these prices higher at this point. Last week we were looking at the potential scenarios, and this is 2 weeks in a row now we saw the best case come through. It wasn't the average case. It wasn't the case that was most likely. It was the best case. And so we extended. We broke through the 2135 area, and we just kept going. That's as good as it gets. What's the best case this week? Well, the market could continue to just surge. In other words, not even come back and even get over those projections and even continue there. I think that would be the best case, and that's going to be a tall order. The worst case, you break back down, you pull back, you get all the way to 2103, and you test it again. I don't think that's a likely case either. I think the more likely case is some sort of consolidation, pullback somewhere in this week, maybe that 2130 level on the S&P. What's the best shorter term trade right now? I think the highest probability trade out there is to take any kind of a retrace and buy it. And so I would take any retrace, buy it on the assumption that you're going to make those ABCD projections. That's the best short-term trade that's going to be out there. What's the best longer-term trade this week? And I keep giving these to you on a weekly basis. I think another good long-term trade is the dollar. The dollar, I mean, any way you look at it, whether you look at it fundamentally or you look at it technically, it looks strong. And let me show you the technical picture while I'm here. Now here it is on the daily time frame, and what you see here and what you saw all last week if you were watching the dollar is every day they came in and they tried to knock the dollar down day after day after day, and what does it do? It just keeps popping back up. You got to break out over this swing point high, and if you draw in the bullish retest regenerate, it came right down to the top of it and bounced straight off of it, and volume came in. That's a suggestion that this market is not going to come back in. You had a big build-up in volume on the breakout, on the Brexit news, a little retrace, consolidation. So you've got this consolidation point taking place up here, and this market simply looks strong on this time frame. If you pull it back to the weekly time frame, it's a little different story, and the good part about that story is that this thing could move considerably higher, and that's why I think it's a pretty good trade. Draw in your two zones. You're coming up to the top of the two zones, and if you pop it up there, so you have two kind of equidistant zones. The top of the zone is where it's going to try to get to, and once it gets over it, it's going to go to the top of the next one. And so you can look at a trade up into the $26 area and where we're trading at 25 now. So talking about $1, that's 4% on a currency, which is a huge move. And if you do anything in a currency that you can get that kind of move, and I suspect it can happen fairly fast when it takes place, that's a great trade. And so I would be looking at the dollar. And if you want to go long term on the dollar, I'll pull up the monthly as well. The dollar has been doing a consolidation now for over a year. So if we go back to this time, it's not quite a year, but it's almost. If we go back to almost this time last year, the dollar spiked up, right, made a high, and has been consolidating ever since. When you get a consolidation over a long period of time, especially in a currency, as you saw back here, when you get that breakout, it's going to be a fast, violent move on the breakout. We're not anywhere near that yet. You know, that halfway zone, we got to get over it first. But if this dollar turns out to be a really good trade, the ideal case for that is that you see this dollar get over this little halfway mark, pop into this top, give you a small retrace, and then break out. And if you're onto the dollar and you have a larger position, you know, and you do another projection up in terms of size, you could get another $2 move after that. And so we're talking about a currency that's going to move 10% before it's over, potentially over a long-term time frame. So that's, to me, one of the better long-term trades that you could be invested in. That's it for this week. Hopefully that gives you some stuff to work on. Of course, I'll give you my notes and my thoughts as the week proceeds. Have a great one. Thanks for joining me. Take care. Goodbye.